Thursday, November 7th, market analysis. Stan Ehrlich, good morning. What do we got? 10:10 California time. A few minutes late this morning. All right, stock market indexes, and then we do futures, and then sometimes, like probably tomorrow, the October lows again, which, ladies and gentlemen, it looks like on November 4th, the E-mini had its low that was the October low. Now that we have made new highs for the whole trend after the election, market obviously liked the results very much, and we're getting significant follow through again this morning. Tomorrow's Friday, maybe we'll see profit taking, and if we do have a small range day today, especially if you make a little bit more new highs, and we are very close to doing exactly that, please notice that we are extremely close to turning yellow, hitting 75 in the RSI, and then I would officially look for a bearish engulfing for an ER signal, bearish ER signal. So we could be coming close. If you're long, great. Stay long, raise your stops, tighten it up a little bit. Lucky you. Good. I hope you didn't buy it real late yesterday and you're chasing the market. Then you don't have much elbow room, but some. Okay, what do we got? The 5-minute chart. Still going up, still strong, not showing any sign at the moment except for minor corrections of turning around to any significant extent. Now, we do have a much smaller range today than we did yesterday. So if we close near the highs, for example, and then open a little bit stronger or early tomorrow, probably get a little stronger to make another new high, you'd be pretty susceptible to a bearish engulfing. And again, we just might get overbought today or maybe tomorrow morning if there's more strength. Next chart is about the same story. We are almost overbought. Look at this, 74.84 I just saw a moment ago. The official high number is 74.98. So any new high for the day is probably going to push us at 75 or up. Turn the bar yellow, price bar yellow, turn the RSI bar yellow. We will be officially overbought on the SPY if we can just squeak into new highs, and it looks very likely because here we are, high and last, still chugging along very steadily this morning. Next, we've got the same story almost at 74.24 at the moment, RSI and the QQQ. But look at this. We have two gaps to consider closing. So a downside correction to 492.95, call it 493, would not be out of the question. It closes not only the up gap from yesterday, but it also closes an old gap from October 24, 25. It's a double if you want to look at it that way. And then it should start going up after that. Next, double gaps, 5-minute chart, QQQ. And now the NASDAQ has also gotten extremely close at 73.72 to the RSI overbought of 75. And my custom RSI, this is not exactly like Wells Wilder's. I use different look back periods. I use different levels, formula, draw it differently, et cetera, et cetera. So if RSI hits 75, it'll change the price color and the color of the RSI to yellow, which is a warning. And then we look for bearish engulfings within a few days or sooner. Now, strong as hell, up there, staying up there. I see no signs of it topping out yet. Same thing goes for the YM, which is incredibly close to 75 also. Today's rally high for the YM, 74.31 on the RSI. Super, super close. Remember, when we get up to overbought conditions, the market tends to top out to some degree or another. It could be for a long time, extremely profound. It could be for a short-term break. And if it's oversold, same kind of situation. Next chart is YM 5-minute. A little bit. We could, if we stop rallying right here and turn back down to minor new lows, that would look interesting. But I'm not going to get anything out of this until we really come down to support and then try to turn around to go up, fail, and start to make lower lows. That's kind of a different story. Not happening, still bullish, looking for minor, back to support, close gap, downside corrections, and then higher. The low was supposed to be in October. Instead, it was a few days late. So early November. That's the way it looks at this point. So the October lows weren't in October. They were in first week of November. And here we are, new historical high grounds in most cases, or about to be. What about the Russell? New high for the rally, possible bearish. We did get overbought yesterday and today, and substantially overbought. Not just 75, 677 or something. We've been up to about 84 plus. That is particularly profound. So I have to say the Russell is very close to turning down for a big correction. Now, this time down, will it hold at 2283-ish or a little higher, maybe 2315? If that's true, if it does hold in there, and that's a very good chance it could, the seasonality is good. You know, November, Decembers are usually up. So I think that's going to happen. And then we'll make another set of new highs again in the next approximate 2 months. We'll be talking about the Santa Claus rally fairly soon. I certainly want to do it before December begins. One of the most profound examples of the Santa Claus rally happened in 2018, when on the day after Christmas, which was Wednesday, on Thursday, December 26th, there was a gigantic bullish engulfing, and it was oversold, and it was going down all December, and it just turned around for weeks and months. That's one of the most profound examples of the Santa Claus rally. Well, I've got it down to the almost a minute mark, date as well, and there's 3 entries and 3 exits. Next chart. We got bonds. Do we have the last shoulder on a double shoulder, 2-year head and shoulder bottom formation? All we need is to start moving higher. And then I'm going to scream bloody murder, yes. Let me lower this little marker to about right there. We are now finally out of, we got a buy signal a couple of days ago that didn't work. And yesterday we got stopped out, so it was a day trade loss or an overnight small loss. We're out. And it went down a lot more yesterday after we were out. Now, today we're up slightly. 23 is pretty good, actually. And if we do turn around here, we're at support. We had been oversold a few times in the last 3 or 4 weeks. So we've got double, triple divergences involved, support involved, almost in the last couple of days, oversold conditions involved. And the timing for the last shoulder, yes. Wow, this is a great combination of stuff if it starts to work. I need to see closing prices above 119 to be a lot more confident that we have that low. So I'm watching for a rally. I'm expecting a rally. I'm not quite really getting what I want yet, but we're up a little today. What about 10-year notes? It is almost exactly the same story. Timing is right. The market went down to where I thought it was going to go down to into October, and it's done more than that. That doesn't mean everything is falling apart. So, timing and trying to pick the date and time in advance is not the easiest thing to do. So we're still in the ballpark timing-wise and price-wise. I just didn't have my rectangle or box quite as large as I would have, could have, should have, and a little lower. Nevertheless, this is still a double shoulder, potential double shoulder, head and shoulder bottom with very big upside objectives involved in the 10-year notes, 126.5. It may take it a year or 2. This could be a very big long-term bullish formation, and your last chance, so to speak, to buy a break of significance at these levels, for sure, if I'm right, is here and now, around 110. Next chart. Well, crude oil with a standard candlestick chart is kind of getting stuck between a rock and a hard spot. Our last decent signal was the sell signal that we had on October 8th. And we also got short a couple of days later on the rally for an ER3. So I'm neutral at the moment. I'm looking for a new direction. RSI is 57. And yeah, it's basically between a rock and a hard spot. Next chart is heating oil. And I'm going to have to say the same statement here. Not sure that we're getting any follow through. And I'm noticing that I don't have my data up to date. So I'm going to have to skip this. I just started looking at this morning. I apologize. So I don't have the 7th involved in this. So I'm going to have to fix that for tomorrow. Goofed, sorry. And that's going to be for gold also. Big down day in the breakout. Silver and copper. Okay, let's get out of New York stuff because that's giving me the problem, the data feed from New York. Soybeans. Chicago, all this is good, I'm sure. Beans, oil, meal, corn, wheat, and hogs and cattle. Now, remember, I've been trying to justify intermediate to longer term bullish commentary in grains. I didn't have much to work with, but now it's starting to develop slowly. We have a minor double bottom in soybean oil in the last few weeks. The upside objective, because it's a small pattern, is only 1057. And for soybeans. And if that's true, we're on our way up because we now have broken above the high between the two lows. That's the breakout right now, today, in progress. If we stay here, we should close here and higher, which looks good, or tomorrow. Now, if we get up to that 1057, you're coming close to a longer term bullish breakout, and it's going to take several days to do it. So you'll be breaking a major bear trend line in the process, the top of a downward slanting channel. So you get a long-term bullish formation. Down channels usually are bullish sooner or later, and that's a breakout. New highs for 3 months or so is a breakout. And yes, you've got large areas of resistance at higher levels, but you're now gaining intermediate and long-term momentum. And that's exactly how bottoms are built and what happens afterwards. So I am mentioning the possibility that we could be starting something really good here. I can't come to any conclusion about these being a couple of shoulders. We got to buy at the bottom on that one. We got to buy at the bottom on that one. So that's all very good. But unfortunately, nothing here in the last few weeks. A little more calmly bottoming out, so to speak. What about soybean oil? Has already, look at this. We have already challenged and touched, or even maybe made by a tick or two, new highs since for the year. Wow, that's a profound statement. Yep. So if we stay at today's high or a little higher, we will have not only a new high for the year, but we'll also have a new high close, which is important. And that would be a bullish breakout. Now, I have put some markings brand new as of this morning to outline some lows, which were April, May, June, and the rounding bottom, sort of rounding, not that good, August, September, and a small, it happened fairly quickly, October low, in this case for soybean meal and, or oil. Wait a minute. Oil, sorry about that. I keep getting them confused for some reason. Soybean oil. And what we've got is a head and shoulder bottom, but I kind of don't like the pattern that much because it's got a double shoulder, it looks like, on the left and only a single on the right, and that's not normal. Otherwise, the body parts are there. The neckline is there. When we closed above the neckline, it shot up for a day or two, had a sell signal, came down to the neckline yesterday for the low of the day, and in one single day had an outside up day, bullish engulfing, closing almost a new high ground. But look at today, it's done it. This is a bullish breakout in soybean oil. This is turning out to be pretty bullish. The minimum upside objective, and it's a minimum, is 53 3/4. And that would be the highest high for way over a year. Damn good move, and it could just be the beginning of something much more bullish. Okay, now meal, not quite the same story at all. We're back down in support. We're down into oversold conditions, and we're trying to bounce, but somewhat feebly so far, 1.6 higher on the day, big deal. Well, looks like we're losing downside momentum, and it is in support, and it is oversold, so we could be turning up. I want to see it close back up above the support line, which is broken. and it's trading mostly below it, that's not bullish. That's bearish. But I don't think we're going to have a bull move in beans and oil and a bear move in soybean oil meal for the next weeks and months. So I'm erring, so to speak, on the side of up. Next, we got corn. Nice rally yesterday. New highs for a few weeks. Staying at those levels. We're only down a few ticks, couple. No reversals. The resistance area bothers me a little. We're almost overbought also. So I think maybe it'll go sideways to down a little. But if the next dip low holds at reasonably high levels, say, 412 and higher, or maybe a little lower than that, 409. But I don't want it to get below 398 and 3/4 and stay there. That would not be good. But there is some bullish price action developing, period. I'm liking it. You notice that in the last few weeks or a month or something, I've been managing to come up with adequate commentary that's bullish, legitimately so, and it's working. So I'm starting to turn intermediate long-term bullish in grains in a general sense, and this is corn. Wheat. Bought the bottom of the market on a buy signal on August 28th. Now, it's going sideways after this downside dip. I don't see any reversals. Yesterday, we did have an outside up day, bullish engulfing. Was not oversold, so it's not an official signal, although I like the kind of price action. I rely on it quite a bit, at least from my opinions. And of course, it was used in the development of ER signals, which has taken well over a decade with all the testing and the usage and all that. So what have we got next? Cattle. Looks like it's rolling over. I'm still thinking it's going to be coming down more. The historical resistance level that topped it out with a bearish engulfing at the top of the move. Just a second here. Let's bring this to the forefront. Yep, definitely a bearish engulfing. And not quite overbought, but super close. I think is going to push cattle down more. Next stop on the downside is going to be in the ballpark of 182 and a half to maybe in this zone 181. And then very possibly 173, low 170s. And we're back to hogs. Now, overbought conditions, even though we had an upside breakout, new highs for quite a while, it didn't survive. And we have come back into this trading range. If you draw a line off of this high here and that high, you just might get the resistance line. I'm thinking we just might get one. Oh, yes, we did. Very, very accurately. So something new I didn't see before. Just modestly interesting. I wouldn't put a lot of credence into it. We've come down. We've closed the gap from a few days ago. I told you gaps are almost always closed, and that's almost 100% closed. I think I did this yesterday. The bottom of the gap was 80.825. Yesterday's low is 80.825 to the exact tick. 100% closed perfectly. Today's low is a little lower, I think. No, apparently today's low is exactly the same, 80.825. Interesting. But we are down. It's just that we haven't made a lower low. Gap closed, period. Now what? Support, trend is up. We're not overbought or oversold anymore. Neutral territory. I think there's a good chance the market could turn back up again. And here we are with the E-mini. Not quite overbought. Didn't quite make it to 75, it looks like, but super, super close. No, super, super close. No, and very close. And no for the YM and the Russell already yesterday and today. You guys have a great day. Profitable trading to you.